Here, in this video, I'm going to explain what insurance is all about. Before I continue, please subscribe the channel, like the video, and hit the notification bell. If you have any question, use comments section. Understanding insurance, protecting your future. Insurance plays a vital role in safeguarding individuals, businesses, and societies from unforeseen risks and uncertainties. It provides financial protection and peace of mind, allowing individuals and organizations to recover and rebuild in the face of adversity. In this article, we will delve into the world of insurance, exploring its importance, different types of insurance, and how it benefits policyholders. Insurance is a financial arrangement or contract between an individual or organization, the policyholder, and an insurance company. It involves the transfer of risks from the policyholder to the insurer in exchange for regular payments called premiums. In the event of a covered loss or occurrence, the insurance company provides financial compensation or assistance to the policyholder to help recover from the damages or losses incurred. The purpose of insurance is to provide protection and mitigate the financial impact of unforeseen events, such as accidents, illnesses, natural disasters, or liability claims. It offers individuals and businesses peace of mind by ensuring that they have a safety net in place to help them cope with unexpected situations. The purpose and importance of insurance. Insurance serves as a risk management tool, protecting against potential losses or damages that could have a significant financial impact. Whether it's insuring property, health, life, or businesses, insurance helps individuals and organizations mitigate risks, ensuring they can recover from unexpected events such as accidents, illnesses, natural disasters, or liability claims. By transferring risks to insurance companies, policyholders gain a sense of security, knowing that their financial well-being is protected. Types of insurance. 1. Health insurance is a type of insurance that provides coverage for medical expenses and healthcare services. It is designed to help individuals and families manage the high costs of healthcare and ensure access to necessary medical treatments. When an individual has health insurance, they pay regular premiums to the insurance company in exchange for coverage. In the event of a medical need, such as a doctor's visit, hospitalization, surgery, or prescription medications, the insurance company pays a portion or all of the costs, depending on the terms of the policy. Health insurance typically includes a network of healthcare providers and facilities with which the insurance company has negotiated discounted rates. Policyholders can choose healthcare providers within this network and receive the benefit of lower costs. Some health insurance plans also offer out-of-network coverage, but at higher costs to the policyholder. Key components of health insurance include premium, the amount paid by the policyholder to the insurance company on a regular basis, usually monthly or annually. Deductible, the amount that the policyholder must pay out of pocket for covered healthcare services before the insurance company starts paying. For example, if the deductible is $1,000, the policyholder is responsible for paying the first $1,000 in medical expenses. Copayment, a fixed amount that the policyholder pays for specific services, such as a doctor's visit or prescription medication. For example, a copayment may be $20 for a primary care visit. Coinsurance, a cost-sharing arrangement where the policyholder pays a percentage of the medical expenses while the insurance company covers the remaining percentage. For instance, the policyholder may pay 20% of the costs, and the insurance company covers the remaining 80%. Out-of-pocket maximum, the maximum amount that the policyholder is required to pay in a given year for covered healthcare services. Once this limit is reached, the insurance company covers all additional costs. Health insurance policies can vary in terms of coverage and benefits. Some plans may offer comprehensive coverage that includes preventive care, hospitalization, prescription drugs, and specialized treatments, while others may have more limited coverage options. Having health insurance is essential as it helps individuals and families afford necessary medical care, promotes preventive health care, and protects against high health care costs in the event of illness or injury. It provides a safety net and peace of mind, knowing that one's health and financial well-being are protected. 2. Life insurance is a type of insurance that provides financial protection to beneficiaries in the event of the policyholder's death. It offers a way to ensure that loved ones are financially supported and can maintain their standard of living after the policyholder's passing. When a person purchases a life insurance policy, they pay regular premiums to the insurance company. In return, the insurance company promises to pay a lump sum, known as the death benefit, to the designated beneficiaries upon the policyholder's death. Life insurance policies can be categorized into two main types. Term life insurance. Term life insurance provides coverage for a specific period, typically 10, 20, or 30 years. If the policyholder dies within the term of the policy, the beneficiaries receive the death benefit. However, if the policyholder survives the term, the coverage expires, and there is no payout or cash value. Permanent life insurance. Permanent life insurance offers coverage for the entire lifetime of the policyholder, as long as the premiums are paid. It includes a savings or investment component, known as the cash value, which grows over time. Permanent life insurance policies, such as whole life or universal life insurance, provide both a death benefit and the potential to accumulate cash value that can be accessed during the policyholder's lifetime. Benefits of life insurance. Financial protection for beneficiaries. Life insurance ensures that beneficiaries, such as family members or dependents, receive a lump sum payment upon the policyholder's death. This money can be used to cover funeral expenses, pay off debts, replace lost income, or provide for the future financial needs of the beneficiaries. The type and amount of life insurance coverage needed may vary depending on factors such as age, financial obligations, and personal circumstances. Consulting with an insurance professional can help determine the appropriate life insurance policy to meet specific needs and goals. 3. Auto insurance, also known as car insurance or motor insurance, is a type of insurance that provides financial protection against losses or damages resulting from accidents involving vehicles. It is a legal requirement in many countries to have auto insurance to drive a car on public roads. Auto insurance policies typically offer coverage for the following. Liability coverage. This coverage pays for damages or injuries caused to others in an accident for which the policyholder is at fault. It includes bodily injury liability, which covers medical expenses, lost wages, and legal expenses of other parties involved, and property damage liability, which covers the cost of repairing or replacing damaged property. Collision coverage. Collision coverage pays for the repairs or replacement of the policyholder's vehicle in the event of a collision with another vehicle or object, regardless of who is at fault. The policyholder is typically required to pay a deductible before the insurance coverage applies. Comprehensive coverage. Comprehensive coverage protects against non-collision-related damages to the vehicle, such as theft, vandalism, fire, natural disasters, or hitting an animal. It covers the cost of repairing or replacing the vehicle up to its actual cash value, minus the deductible. Personal injury protection, PIP, or medical payments coverage. PIP or medical payments coverage pays for medical expenses, lost wages, and funeral costs for the policyholder and passengers injured in an accident, regardless of who is at fault. Policyholders typically pay a premium either monthly or annually to the insurance company. Having auto insurance is crucial, as it provides financial protection and legal compliance. It ensures that policyholders can afford repairs, medical expenses, and potential legal costs resulting from accidents. Auto insurance also protects other drivers and property by providing compensation for damages caused by insured drivers. It's important to review the terms, conditions, and exclusions of an auto insurance policy carefully. Policyholders should understand the coverage limits, deductibles, and any additional optional coverage available. Consulting with an insurance professional can help in selecting the appropriate auto insurance coverage that meets individual needs and provides adequate protection. 4. Property insurance is a type of insurance that provides financial protection against damage or loss to property. It offers coverage for various types of properties, including homes, buildings, belongings, and assets owned by individuals or businesses. Property insurance policies typically protect against risks such as fire, theft, vandalism, natural disasters, for example, hurricanes, earthquakes, or floods, and other specified perils. The insurance company compensates the policyholder for the costs of repairing or replacing damaged property up to the coverage limit specified in the policy. Key components and features of property insurance include dwelling coverage. This aspect of property insurance protects the structure of a home or building. It covers the costs of repairing or rebuilding the property if it is damaged or destroyed by covered perils. Contents coverage. Contents coverage ensures personal belongings within the property, such as furniture, appliances, clothing, electronics, and other possessions. If these items are damaged, stolen, or destroyed, the insurance company reimburses the policyholder for their value or the cost of replacement. Liability coverage. Property insurance often includes liability coverage, which protects the policyholder against legal claims or lawsuits filed by third parties who are injured on the property. It covers medical expenses, legal fees, and potential settlements or judgments. Additional living expenses. In the event that a covered loss makes the property uninhabitable, property insurance may cover the additional costs incurred for temporary accommodation, meals, and other necessary living expenses. Deductible. The policyholder is typically responsible for paying a deductible, which is an amount they must contribute out of pocket before the insurance coverage applies. For example, if the deductible is $1,000 and the insured property suffers $5,000 in damages, the policyholder would pay the first $1,000, and the insurance company would cover the remaining $4,000. It's important to note that property insurance policies have specific terms, conditions, and exclusions. These can vary depending on the insurance company, policy type, and coverage options chosen. It's advisable to carefully review the policy documents and consult with an insurance professional to understand the scope of coverage and any limitations before purchasing property insurance. 5. Business insurance is a type of insurance that provides coverage and financial protection to businesses against various risks and potential losses. It helps mitigate the financial impact of unforeseen events that could disrupt operations, cause property damage, or lead to legal liabilities. Business insurance policies can be customized to meet the specific needs of different types of businesses, ranging from small startups to large corporations. The coverage options and types of insurance available for businesses may include property insurance. Property insurance protects business property, including buildings, equipment, inventory, and supplies, against damages or losses caused by perils such as fire, theft, vandalism, or natural disasters. It helps businesses recover and rebuild in the event of property damage. Liability insurance. Liability insurance covers legal obligations and expenses if a business is sued for bodily injury or property damage caused to third parties. It includes general liability insurance, which provides coverage for accidents or injuries that occur on business premises, and product liability insurance, which protects against claims arising from defective products. Professional liability insurance, also known as errors and omissions, E&O insurance. Professional liability insurance provides coverage for professionals who provide services or advice. It protects against claims of negligence, errors, or omissions that may result in financial loss for clients. Workers' compensation insurance. Workers' compensation insurance is mandatory in most jurisdictions and provides coverage for employees who suffer work-related injuries or illnesses. It covers medical expenses, lost wages, and rehabilitation costs, while also protecting businesses from potential lawsuits by employees. Cyber liability insurance. With the increasing threat of cyber attacks and data breaches, cyber liability insurance helps businesses cover the costs associated with cyber incidents. It includes expenses for data breaches, notification to affected parties, legal fees, and potential liabilities arising from the breach. Commercial auto insurance. Commercial auto insurance covers vehicles used for business purposes. It provides coverage for liability in case of accidents, damage to the vehicle, and other related expenses. Business insurance is essential for protecting businesses from financial losses that could otherwise jeopardize their operations and viability. The specific coverage needed depends on the nature of the business, industry, size, and specific risks faced. Consulting with an insurance professional can help assess the risks and determine the appropriate coverage to adequately protect the business.